Stephen Patterson is a financial strategist and the director of client relations for Key City Capital. I've spoken to him before. Great guy, and he's nice enough to join us here on Inside Money. Hi, Stephen.
Hi, Chip. How are you?
I'm well.
Hey, Stephen. Great to see you.
Good to see you, Mark.
I know Mark is chomping at the bit with a lot of things he'd like to discuss. So let's just dive right in here. Go ahead, Mark.
So, Stephen, you work for a firm that specializes, among other things, in providing information and opportunities in the alternative investment strategy universe. Tell us what are alternative investments? Why should people know about them as an investment option, and where do they find out more information about them?
Sure. The alt space has grown significantly in the last few years, and it's a way to invest outside of Wall Street, essentially, when I talk with clients about it. It's private placements like ours. We offer Reg D funds registered with the SEC, and we invest in things like real estate, mortgage-backed securities, asset-backed lending, investments that provide a yield outside of what the traditional source of investing that your 401k or your IRAs have been involved with.
So your website on the homepage, it says earn high yield returns without volatility. Tell us what that means.
Sure. One of the primary sources for yields for my clients is through the investment in multifamily real estate. So we buy apartment complexes across the Southeast. And so what takes the volatility out of it is every month on the 1st, the same bill comes due, rent. And so through rent collections, we're able to provide a pref return to our clients that gives a consistent income stream that comes with the tax advantages associated with real estate ownership.
One of the ways I've heard alternative investments described is they are non-correlated, which is a fancy word, non-correlated with the stock market or stocks and bonds and other traditional investments. What does that mean?
Yeah. So, we've all lived through 2022. We see that the S&P 500's off, 30% on the year. If you look at the same time frame for the clients that we work with, they're all positive for the year because of where our assets are allocated and how those income streams are derived. So, whether the stock market is up or down, it has minimal to no correlation to what we do for a living.
What's interesting is that we specialize in real estate debt investment strategies. So we have mortgage pool funds that are also Reg D funds. And when you talk about non-correlation with stocks and bonds, that certainly applies there. But one of the other things that's interesting about our debt fund strategies is one could make an argument that they're non-correlated with the real estate market as well, because when real estate goes up or down, there's always a demand for capital. And our outlook is there is no good or bad real estate market. It's either good for buyers or good for sellers. And if it's good for, regardless of who is buying or selling, somebody is acquiring real estate and they generally need money. And the alternative real estate lenders like our company are happy to make that happen, especially when the banks are pulling back, which is exactly what they're doing right now.
No, I think that's true. And I'll give you a good example of inflation, right? I have a number of clients that were very concerned about inflation and what that was doing. But if you look at inflation in a real estate investment, when inflation rose, so did rent rates. When inflation rose, so did property values. So we were a direct beneficiary of that market, whereas you saw the exact opposite happening in the public markets. Mm-hmm. So that's where, when you look at modern portfolio design, there's a space for alts being carved into modern portfolio design. And then it's, incumbent upon the consumer to do their due diligence and find guys like us to place their capital in that alt space so that we can smooth the overall return of that portfolio, specifically for retirees that are looking for those types of income streams.
There'll always be economic cycles. And that's something that the older you get, the easier it is to see and understand. And you just made a great case. As you traverse these, there's opportunities everywhere, and I know that sounds harsh for people that are, underneath a thumb, but their time will come. It works that way for everyone. Inflation is obviously a concern, but you know, again, for those of us who remember the late 70s, you know, and early 80s, it's much different now. And you know, you're exactly right, Mark, about, you know, if you're selling or if you're buying, there's an opportunity depending where you are in that particular, and it will come around and they will reverse, and just being prepared for those is a big part of it.
What's interesting is that, Stephen, you mentioned, you know, how poorly the stock markets performed last year. But, you know, and you go back 5 years, we had some stellar years in the markets. Now, in the alt space, for example, in you know, our debt funds, we've consistently paid between 7 and 10%, depending on which fund. But even every individual fund that we have, you know, they were just consistent. It was almost like the tortoise, slow and steady wins the race. You know, high reliable yields generated by real assets, in this case, real estate debt secured by real estate at low LTVs. So it may not be for your entire portfolio, and no one would ever recommend, and certainly you as an RIA probably would never recommend that you sink all your money in alts. But for those of our investors, I know, and I talk to them regularly, and I send out newsletters regularly, and I get a lot of really positive feedback. Yeah, the money they had with us during the years, the stock market went up 20%. Well, you know, the stock market outperformed us. But, you know, last year, our investors were really happy, especially what happened in crypto and with interest rates and with the stock market in general.
No, and I think you hit on the key, hard asset, real value. You know, I talk with clients about this often. You know, Apple's give or take $150 a share. You know, and I always ask the question: can you tell me why? Why is that security priced the way it is? And rarely can they. But then when we begin to talk about real estate, and we begin to talk about, you know, a $50 million apartment complex, and we talk about location, and we talk about amenities, and we talk about cash flow on the asset, then it begins to make sense to them as to the pricing around those things. And so just as you've done well on the debt side, especially in those years, like you said, the stock market was doing 15, 20% in their individual portfolios, and you were still in that 7 to 12% range. You did it with debt financing. I did the same thing on the equity side. So just on the opposite side of the coin, and then gaining that appreciation on that asset at the sale. You know, it's a powerful combination. And, you know, when you think about an alt space, when you can take debt positions and equity positions and meld those together, it's a real winning dynamic for the portfolio.
Tell me what do you see in multifamily right now? Is it, you mentioned earlier that rents have remained strong in a market where real estate prices here in California, according to Case-Shiller, have already dropped at least through October, which is the most recent information we have, anywhere from 10 to 15%. So, you know, we may actually see that 20% drop, which, given the COVID premium we all experienced, maybe is not that big a deal. But how has that's the single family residence. That's, you know, my house is worth maybe 10, 15, 20% less than I could have sold it for last year. What's happening in the multifamily, which I know a lot of people have invested in the last 5 years?
You know, multifamily, we're actually seeing a little bit of the opposite in the Southeast. So our focus is in the Southeast, primarily because of just that natural migration we're seeing right now.
Oh, yeah.
I mean, you look at that 2020 census, and you had California losing seats in the House of Representatives. You had Pennsylvania, New Jersey, New York, right? Who were the beneficiaries of that? Texas, Florida, Tennessee. So those are the markets that I really try to focus in on. But in the multifamily space, as these interest rates rise, it's keeping people from realizing home ownership, right? And so what does that do? It keeps them in an apartment complex longer. The other piece Chip alluded to is inflation, right? That inflation's going up. Well, guess what? So are those rents are rising. So it's actually been a quite profitable time for us. But, you know, where you can locate in markets where there's high demand, and, you know, and we'll use Dallas, Texas, where I'm located right now. You have 360,000 people a year coming into the state of Texas, right? Of that 360,000, about 120,000 of them find their way into Dallas, Texas. That's a market I want rental real estate in, right? Because they're either a full-time renter, or they're going to rent for a period of time while they're looking for a home. And that's a place where investors can capitalize.
Do you find that many registered investment advisors or financial advisors, do many of them promote alternative investment strategies, or would you say the majority of them are more on the traditional investment side?
No, I think you're going right down the path. Yeah, it's traditional placements, right? Because it's how they've been designed, either through their firm or through the broker dealer that they're working with, and it just makes sense for the model. However, in the last 2 years specifically, I'm beginning to see a whole lot more interest in the alts because, alts are producing safe, consistent yields for clients. And so, the more progressive thinking out there, I see them creating more of an alt space in client portfolios. And I'm getting those phone calls saying, hey, how do we work together? But 3-4 years ago, I would tell you that was almost non-existent.
Well, and that, yeah, I would agree with that. And we promote our funds through RIA networks, and we have to talk to a lot of them before we find ones that it's like 1 out of 10 or 1 out of 20 have an interest in knowing what we do. And one of the things we talk about before we got on the show, Stephen, is that a lot of regular everyday retail investors, many of them don't know what alternative investments, or what we're calling here alts. They don't really, they don't know, either don't know what they are, or they don't really know where to find them. And so we love working with RIAs. We love working, having an RIA promote and support our product through their client network. And I know a lot of clients, they like to invest through their RIA. So that's, that takes a while. It takes several years to build that reputation and that comfort level, et cetera. And we've tried, hard for years to do that. How have you guys, have you been doing this for a while, and how do you promote through your network?
Yeah. Because of my own background in the industry, I was able to reach out to colleagues that were looking for this type of value for their clients. And so we've been able to do some work there. I am licensed through a broker dealer. So I'm able to reach out to our RIAs through that broker dealer to provide what we're looking for. And then we went through the due diligence of being placed on the Schwab platform about 2 years ago.
That was going to be a question I had, is can people invest through their brokerage accounts? Certainly self-directed IRAs, I know, are a favorite vehicle for people to invest in some of our funds. But being on the Schwab platform, that's really good.
Well, it opened up an RIA pool for sure. And then developing meaningful relationships with the self-directed IRA companies takes you a long way because of individuals wanting to use IRAs for investment with us. But it's not an easy road, as you were referencing earlier. And you really, it's a matter of sitting down with those RIAs and letting them wrap their mind around why it makes sense and how we're consistently performing at the level we perform at. I think that's where it becomes difficult sometimes.
Do you find that some of your investors today, like mine, are reaching out to you and going, well, how do you guys think your investments are going to fare, given that it looks like real estate prices are going to go down? Or maybe they just believe that because we know what's happening in the media, and there's this drumbeat of negative news and miserableism, as one economist coined the term. How do you deal with that? How are you talking to your investors about why they should stay the course?
Well, I just remind them that bad news sells newspapers, right? Good news is never sold a newspaper. And so, it's profitable for certain groups to, tout recession. It's profitable to say that there's a demise on the horizon. But, we can sit down and look at historical returns across portfolios. We can sit down and look at current performance across those portfolios. And then I can show them just the, our REO schedule showing just prices and what they have done. And, if you're in the right markets and you've made wise decisions, it's just like in the stock market. We buy good companies, right? We're not out there being completely speculative. when investing in stocks. And it was the same with real estate. It's the same when you're picking assets to lend on or not lend on. You have a criteria and an investment thesis that you operate in, and you don't deviate from that.
What's interesting is an economist I follow here in California who was one of the few warning the public in 2006 and 7 of what was he saw coming. He does not see a recession for this year, and he just put out a newsletter this week saying that he just doesn't see anything in economic conditions that would cause the country to go into recession, notwithstanding all the negative news that is pounding consumer sentiment and affecting, stock market prices. As you say, negative news tends to drive down the market. But other than profits, which obviously are a concern, just all of the other metrics that make up the economy, in his view, he doesn't see a recession. So I just wonder, the people whose opinions you trust, what are you seeing as predictions in the marketplace this year?
Well, it's funny you bring that up because I was typing our quarterly newsletter before we joined on this program, and I have two concerns. Continued increasing of rates beyond what is needed, it gives me pause. However, I think that we got some good news on Thursday. We're still seeing inflation go down, and I think that the Fed is definitely taking all of those issues into account. And then the one that I will be very focused on in the next few weeks is Q4 earnings reports. What did we really do in that holiday season? We know that there was Amazon layoffs. We know that there was FedEx layoffs, but those were in their distribution divisions, right? So, what was that foreshadowing accurate or not? But the reality of it is wage growth is still up. Home prices in most markets are holding very steady. Inventory is still tragically low across areas, which that's simple supply and demand. I mean, if there's not a lot of inventory out there, and there's still that demand, then that price is going to remain high, right? So I'm actually very bullish for 2023. I feel good about it. We're seeing mortgage rates dropping, which helps our business substantially. I'm with you. I don't know that I see the dark clouds that you find on certain programming.
Yeah, the news feeds really are amazing. Chip and I talk about it all the time. It's just real estate prices have already gone down. There are a lot of predictions about mortgage rates potentially being as low as 4 by the end of the year. Although I would be really happy with the low 5s at this point. I think 6 is the new 3 in California, and I am bullish for the real estate marketplace in California come this spring if it ever stops raining here. So, but I think it's going to surprise some people, and it's going to silence a lot of the naysayers who, I guess you mentioned it earlier. I think there's not a self-promoting news feeds out there. You have to be careful what you read. You have to look at who's promoting it as a major news source, and do they have an ulterior motive? Are they trying to talk the market down, whether it's the stock market, whether it's the crypto market, or whether it's real estate? People want there's a segment of the marketplace that is just pining for the market to drop 30% again so they can go and swoop in a bunch of cheap real estate.
No, I agree with that. And, let's face it, our country operated incredibly efficiently with interest rates between 5 and 7% for a really long time.
Yeah.
We borrowed at 8%, and we're glad to see those numbers, right? And so just because we've had an abnormally depressed interest rate for a long period of time, the idea that home sales somehow stop because mortgage rates are at 5 or 6% to me is just completely illogical, when I can remember very clearly purchasing at 7 and 8% early when I started my life coming out of college, and they were, we paid our bills and life moved on. And I think a healthy interest rate in this country right now is 5-6%. I don't see why that's frowned upon. And suddenly we have all of these people running about, Chicken Little, the sky is falling, because we're seeing 6 and 7% interest rates, which I get that's a really quick increase, but it is not business prohibitive. I don't believe in any way. I just think that, whether we're talking about the market or whether we're talking about, people's perceptions, it all goes back to that key piece in behavioral economics, right? And so much of what we see in the public markets and the private markets is done based on someone's feeling about something, or it's less to do with the facts. And I think that, Mark said it very well, consider who it is, consider the source and what their motive is behind some of those predictions.
Yeah, the problem today is that, when you scroll through your phone, and most of us get our news from our phone, we all have news feeds, whether it's from Google or whatever. And I'm amazed at the sources that my feed shows me. I'm continually telling it, stop showing me this, because I don't want to know what some, so-called real estate crash bro, as they're known in the industry, is predicting in terms of, 30% fall in real estate prices, and it's interesting. I've even seen articles about, overbuilding in certain markets. I'm thinking, where? I don't know a single market that's overbuilt right now in terms of real estate housing availability. Certainly nowhere in California.
Well, and I think that, I go to sources, right?
Yeah.
I consider Mark a source. He's actually lending money on these projects. So when I want to know about what pricing's doing, I'll talk to Mark about that, because he's seeing those numbers. When I want to know about inventory, I'm going to go talk to the realtor that's out there trying to sell homes right now, that's telling me, I have 10 homes in this price range, and traditionally I've had 40 or 50. The market inventory is incredibly low, and prices are holding because there's still a demand for the inventory and there are no homes to sell. So when I read these things about, we're overbuilding markets, I'm with you. Where? Show me where that is, because I don't see that.
Yeah. So how do people get a hold of you, Stephen, if they want more information, or if they're listening and they're in the Texas area? And it sounds like you know what you're talking about when it comes to real estate investment strategies, particularly for real estate investment syndications. It's a way to own. It's a way to what you do. It sounds like to me is it's a way to profit from the reliability of real estate and real estate cash flows without having to run around and compete and buy real estate directly.
Yeah, it is a passive investment real estate. You don't get the 2 a.m. phone call that the hot water won't turn on, right? We're dealing with that. But you get all of the advantages of owning passive investment rental real estate. We're at keycitycapital.com. There's a link to schedule a meeting. And when you schedule that meeting, I'm the guy on the other end of that Zoom or that phone call. And we can sit down and talk about your investment needs, make sure that you qualify for the investment, and talk about how it might make sense in your portfolio.
That's great.
Well,
that's great.
Stephen, it was really great to have you here. Thank you so much for your time and insight. And I know that Mark loved it, because I just watch his eyes roll in his head because he gets excited.
Finally, someone who speaks my language.
All right, be well. Thank you, Stephen.
Thank you, guys.
Thanks.
Bye-bye.